Hold on, let's rethink your next EV purchase. Recent developments suggest a significant shift in the EV market. There's emerging news about an unexpected turn in the EV industry, and it's painting a rather surprising picture. It seems that consumer interest in EVs is waning, with numerous unsold electric cars accumulating at dealerships. Despite the initial rush, the enthusiasm for buying these vehicles appears to be cooling off. By the end of this decade, car manufacturers plan to invest an astonishing $616 billion exclusively in electric vehicles. This year alone, close to 1 million EVs were manufactured and delivered to dealerships. But then, an unforeseen twist occurred, potentially leading to one of the most significant setbacks in the automotive industry. Here's the crux. The EV market is facing a potential crash, with prices possibly dropping by up to 50%. If you're considering buying an EV, now might not be the best time. Major companies like Ford, GM, and Tesla have invested heavily in EVs, but the market uptake is not as strong as expected. In the US, the sales pace for EVs has decelerated, with the time taken to sell an EV now nearly double that of last November. While many still see EVs as the future replacement for combustion engines, there are growing concerns about high costs and limited range, particularly for entry-level models. Factors like range anxiety and insufficient public charging infrastructure are notable challenges. The average consumer remains cautious about fully embracing EVs, especially for long-distance travel, which requires strategic planning for charging stops. However, there's a deeper issue at play here, involving international market dynamics that are seldom discussed. Reflecting this cautious sentiment, EVs are now remaining on dealership lots for 90 to 100 days, compared to the 52-day average for traditional internal combustion engine vehicles. In 2021, 86% of US consumers considered buying an EV, but by 2023, this number had fallen to 67%. The higher price point of EVs compared to gasoline vehicles is a significant factor. However, the luxury EV segment hasn't experienced as severe a slowdown, likely due to its wealthier customer base being less sensitive to price increases. Even Tesla, a pioneer in the EV market, hasn't been spared from this trend. Despite being the only profitable EV manufacturer in the US, Tesla has had to reduce its prices, with cuts as deep as 30% to maintain its sales figures. Tesla's CEO, Elon Musk, expressed concerns about the current economic climate, particularly highlighting the impact of high interest rates. During Tesla's earnings call, Musk emphasized the importance of monthly car payments for most buyers. He cautioned that persistently high or potentially rising interest rates could significantly hinder people's ability to afford new cars. This concern comes at a time when the automotive industry, particularly in North America, has committed roughly $100 billion to developing EVs for both luxury and mass markets. However, the economic pressures are making it increasingly challenging to meet these ambitious goals. For example, the entry price for Ford's F-150 Lightning is about $5,000 more than its gasoline version, which is priced under $37,000. Similarly, General Motors' Chevy Blazer EV shows a stark price increase, starting at $56,000 in contrast to its gasoline variant's $37,000 price tag. The primary factor driving up the cost of EVs is the pricey batteries they require. According to Bloomberg NEF research, it might take at least 3 more years for EV battery costs to align with those of internal combustion engines. Tesla's recent aggressive price reductions have had a significant impact on its automotive revenue growth, which slowed from 51% last year to just 5% in the recent quarter. The company's automotive gross margin also declined to 16.3%, its lowest in over 4 years. These market conditions have led major automakers to reconsider their expansion plans. Tesla has hinted at delaying a new $1 billion plant in Mexico, while GM has postponed its electric pickup truck production expansion in suburban Detroit to late 2025. Ford is also re-evaluating, delaying a significant portion of its planned EV investments. The financial implications are evident. Ford's electric vehicle unit, Model E, reported a $1.3 billion operating loss in the last quarter and anticipates a $4.5 billion loss on EVs this year. Currently, Ford's sales of EVs result in a loss of nearly $36,000 per vehicle. A clear example is the dip in sales of Ford's Mustang Mach-E, which fell 53% in October 2023. Despite previous sales records, Ford has reduced the production of this model. The overall EV sales for Ford have increased by 12.6% through October, outperforming the growth of internal combustion vehicles at 6.8%. However, this was overshadowed by a more substantial increase in hybrid vehicle sales at 18.8%. In response, Ford launched a new flash trim for the 2024 F-150 Lightning, offering enhanced features, but again at a high price point. Furthermore, Ford's decision to halt F-150 Lightning production was a significant move, especially considering their plant in Thailand had recently increased output. The EV had contributed to over 70% of Ford's total EV sales in a record third quarter. Alongside this production cut, Ford is delaying significant EV-related investments, including a second battery plant in Kentucky. GM is also facing similar challenges, announcing delays in the production of several EV models, including the Equinox, Silverado RST, and GMC Sierra Denali. The Orion assembly plant will now start production of the electric Chevy Silverado and GMC Sierra by the end of 2022, a year behind schedule. GM's decision reflects a cautious approach to managing capital spending and aligning with the fluctuating demand for EVs. Recent statements from Mercedes-Benz executives have cast a spotlight on the uncertainties facing the EV market. Leaders from major automotive companies, including Ford, have voiced their concerns about the challenges in this sector. Ford CEO Jim Farley, during the company's third quarter earnings call, candidly addressed these difficulties, noting, "It's been a challenging situation for sure. People are not ready to pay what we thought they would." Farley emphasized that having a great product is no longer sufficient. Competitive pricing is now a vital factor. He also raised concerns about the affordability of EVs for consumers, citing the significant price difference between average vehicles and EVs in the US in September 2023. A less-known factor affecting American automakers' ability to sell EVs is the control of EV battery supply. Nearly 80% of this supply is dominated by China, presenting a challenge for the US in its efforts to become self-reliant. The global semiconductor shortage in 2021, influenced by China, led to significant shortages during a period of high demand. This situation initially fueled a surge in EV interest, prompting massive investments in Chinese EV supplies. However, as these vehicles reached the market, the severity of the situation became apparent, leading to a downturn in sales. Consequently, brands have been forced to reduce prices significantly. Bloomberg NEF reports that the average price of a battery electric vehicle dropped by 13% in 2023, averaging around $33,500. Partly due to decreasing battery costs, which are expected to reach a point favorable for mass EV adoption by 2023. Analysts are now advising consumers to delay their vehicle purchases, predicting further price reductions in the near future. This marks a stark contrast from the recent trend where consumers were willing to pay premiums and endure long waits for new EVs. However, with an anticipated market downturn, it's advisable to wait until at least the second quarter of 2024 before purchasing an EV. Automakers face the critical task of balancing affordability with profitability as they navigate these shifting market dynamics. The future of the EV industry is likely to be shaped as much by economic factors as by technological advancements. In the current market scenario, opting for hybrids or traditional internal combustion engine vehicles might be a more financially prudent choice to avoid the potential pitfalls of the EV market. What are your thoughts on the future affordability of EVs? Share your thoughts in the comments below.